What's up, everybody? This is Jimmy with Trading Decoded. It is August 1st, August 1st, 2025. And boy, were the money printers on today. And I don't mean it by the Fed. I mean by, well, the charts allowed us day traders to make an absolute killing today. It's worth noting, I don't wish for people's investments to crash or anything like that. Guys, you have to understand, because I do get some heat sometimes when I'm happy when the market has moved down. It's not that I want it to crash. It's just that we as day traders want the market to move. Okay, we want it to move, and we want it to move cleanly so that we can make easy money. We're not holding long-term investments or not trading long-term investments, but if you're an investor, you're not worried about days like today. Okay, so when you hear me saying, especially on down days, that it was a great day, I'm not trying to throw salt in your wounds of your long-term portfolio taking a beating. Okay, please don't take it that way. But as a day trader, you know exactly what I'm talking about. Days like today are what makes this job so lucrative. And quite frankly, on a day like today, it was enjoyable to be a day trader if you didn't have any biases and you just played what the chart was willing to give you. That said, we had an outstanding 2 days in the community. I know I didn't make a video yesterday, but very, very high win rate. It was a good 2 days. And yeah, today was no different. Today was better, actually. We needed this. With that said, guys, buy my book. I teach you how to do everything that we do in here every day. The charts don't always work out in our favor using my strategy, but that's the case for any strategy. But it doesn't matter what you're trading. What you can learn in this book will absolutely help you learn how to spot better trade setups that will most likely increase your win rate. Okay? I'm not teaching you how to get rich overnight or anything like that, because that's just not realistic. I am teaching you what to look for so that you can plan every single one of your trades from start to finish, not get surprised by the market or what's going on, not panic while you're in your trades. All of that stuff comes from proper planning. You should know what every trade is that you're going to get into before you get into it, and it's not difficult to be able to do that if you know what you're looking for. And that is what this book covers. Okay? So let's go ahead and get into the charts and see what we got going on. As always, we have a call put scenario. And as I tell you guys every time, it's simply a line on the Q chart that if we cross it in one direction, we're looking for puts. In this case, if we got below 557.61, we were looking for puts. If we got above 559.76, we'd be looking for calls. Now, admittedly, I was very comfortable with the idea of playing puts this morning. It's not a bias. It is the fact that we got horrible job reports this morning, horrible revisions, and the market was not happy about that. Plus, we spent from 8:40 in the morning Eastern time till the open trending down on both charts anyway. So we were prepared for puts either way. Weren't looking to jump right in just because of those two things. We had a very clear, defined point that we wanted to get through before we jump into puts. We wanted to see if ADD was going to start printing red or open red or whatever the case was. So we didn't get in on the opening candle. At least I didn't. I got in on the 932 candle. As we were pushed down on the opening candle, big green candle on the way up, near resistances on the Qs, resistances on SPY. SPY had already broken support. And during this pullback here, you take a look at ADD, it's careening off of a cliff. That's a lot of momentum to the downside. So I can't argue with anybody who wanted to get into this trade a little bit earlier than waiting for the break of the put line. Depending on when you got in, if you got in halfway or lower, you didn't gain a whole lot of extra money on that by getting in aggressively. But as far as an A+ setup goes, guys, this is it. Downtrend, resistance holding, lots of selling pressure in the overall market as indicated by ADD. SPY was printing red. Qs are printing red. There's not much left there to stop the price from continuing down, even if it's a temporary move down. That is the whole point of knowing where the next line of support is. In our case, we were looking for 556.44 on the Qs. You don't know if it's going to get there, but I do know that if I break support A, momentum still looks good in that direction. I'm assuming we're going to go to support B. That's where I make my money. Now, as you could see, I got out of this trade. I had an alert set there. As soon as we hit that beep, I got out of the trade. Obviously this would have turned into a monster trade had I held, but that was my trade plan. And it felt very good, not only for me, but for a whole bunch of other people. Guys, that was a beautiful trade to the downside. And these moves don't look big because the charts are kind of scrunched up. That right there, 557.61 to 556.44 is $1.20 move. That pays very, very nicely when you're dealing with leverage options. Okay, and we grabbed that. Now, some people don't like to play aggressively that kind of a move, and that's fine. Fortunately, ADD continued its downtrend. We hit support. We pulled back to a resistance on both charts. Resistance here on SPY, resistance here on Qs. ADD still printing red. What does that mean, guys? That means this is likely to stay a lower high. Let's get into puts. And because of a lower high, we're assuming, because probabilities say so, that we're more likely to break this support than to hold it. I wish I would have taken this trade instead of the one I took. Now, the one I did take ended up making 34.8 or 38.4%. I don't remember, 38.44%. It was a beautiful trade. I was very happy with my win. That was the only trade I took today. But again, we have some people that show up late. We have some people that want to wait for a couple of minutes to make sure we have a defined trend or something. That's all fine. Pull back to resistance during a downtrend with ADD printing red is the absolute best time to consider getting into puts. Why? Because that resistance that you're trying to buy into also becomes your stop loss. If you close on the other side of that line, you stop out of the trade. As long as it holds, we're not only looking for a break of the support it just bounced off of, but we're looking for a continuation down to the next one. Now, the move from 557.61 down to the line we were targeting for that trade is 555.05. So now you're talking about a $2 move. Extremely clean, not a single green candle printed in that time. And when you get into this kind of profit this cleanly, the trade gets a whole lot more comfortable. And this is where I spend my time trying to help people stay in their trade longer. There was absolutely no reason to get out of this trade anytime prior to right here. Now, why here on this green candle? It's not because it's a big green candle, but the way I look at it is this. If my original profit target was here, a $2 move, you're very, very green, okay? If we close below that line of support now becomes my new stop loss. This is how I do my version of a trailing stop. It's not a mechanical stop, but as we move through these levels, I just want the level that we close below to become the new resistance. Okay? That's how I manage a trade. Now, I'm not in this. I wish I was. This turned into a banger of a trade. My trade was a banger. This is just a banger on top of a banger. And then once again, you stayed in all the way because after closing through all these supports, the only one we closed back above was here. Now, in saying that, yes, you would have stopped out of this trade, and yes, you would have held through a couple of pullbacks, and ultimately it would have dipped down a little bit farther. But you can't stay in trades hoping that if you do, it's going to continue to go in your favor. You have to, at some point, protect the profits that you initially took the risk on, hoping to gain in the first place. You got to protect some of that, because if you don't, or you let too much of it get taken away from you, this becomes a very emotional trade, and you are more likely to become a hold and hoper in that trade than you are to accept a smaller win. It's not a good spot to be in. Please just recognize when especially if you've made it well beyond your original profit target. as far as a line on the chart. I'm not talking about dollars here, guys. We were aiming from resistance, assuming we were going to break support because of the lower high and ADD printing red, expecting it to get down to the next support. That is the totality of that trade. Now, what keeps us in these trades longer, at least for me, is if I am holding on to puts and I am nearing my profit target. If I look at ADD and it's still aggressively moving down, I will take the risk of trying to hold through that support, hoping that the momentum of the rest of the stock market, not just the Qs, will help carry us through that line of support. And when you're up, especially in a $2 move, the comfort of trying to hold for a little bit more is a lot easier. It's a lot more comfy to do it here than when you're trying to hold barely in the green, okay, on your trade. We get through that line, and the only time after closing below these support lines that we closed back above it was this green arrow here. Now, as we move down, I stopped drawing lines on SPY because it was very clear to us that the Qs were controlling SPY, so we just paid attention to the Qs levels. And every time we pulled back to a level of resistance, while maintaining a downtrend, we were looking at ADD to make sure it's still printing red, hoping that we're going to break support and head down to the next support. At some point, and we talked about this as we were nearing the bottom of this run, I told everybody, I said, guys, please understand that no run lasts forever. Okay. At some point, we're going to hit a support that people find the price of these stocks and whatever attractive enough to buy the dip. And at that point, money will come back into the market and turn us back the other way. I'm not saying it's going to be a V-shaped recovery on the day. I'm not saying we're going to reverse and go make all-time highs. I'm just saying at some point, this move to the downside is certainly going to end, even if it's temporary. So that's why as we move down, especially as we move down, it is not as advantageous to buy breakouts, because at some point you're going to buy the bottom. And if you've been trading for long enough, you probably can count on two hands how many times you've bought at the worst time of a move just because you waited too long and bought the bottom and just literally, there's probably a whole bunch of people that bought puts right here on this candle, and then it immediately ripped in the opposite direction. Okay, just be aware of that. It's not a good place to be, and we've all done it as day traders. However, every time we move down to the following support levels, that is always a suggestion to get out with profit. Okay, that's all there is to it. As we pull back, we close back above the downtrend line. Now that in me or in our room means we take puts off the table, even if it's temporary. Puts are off the table, but it doesn't mean jump into calls yet. Okay, this is one of my favorite trade setups. If we are going to jump into calls, I prefer a close above the trend line, negating that trend line, meaning we're no longer trending down when we close on the other side of it, technically. And I want to get above the most recent resistance to our left after doing this. Okay? When that happens, if we come off higher lows, in the process of doing that, that's just strengthening the chance for this move to continue up. Take a look at ADD. If it's printing green, this is a solid go. Now, it doesn't feel comfortable buying calls at the bottom of a move that aggressive. I get it. But we had, fortunately, a whole bunch of people not care about that aggressive move down, played the chart, and they got rewarded handsomely. What were we aiming for here? Well, we were hoping to get through this resistance area right here. And I told everybody the next target up is right here on the Qs at 557.40. Had an alert there and everything. Buy your calls. ADD's moving up, trending up, printing green, V shape. We broke through resistance. Let's go. And they bought the calls here and they rode it all the way up. We got within just a few cents of the 40. When I say a few cents, I think we were about 8 cents shy of it at the highest. And as we move up, we start to see ADD no longer printing green or trending up, which tells me that the buying may be slowing. This is when I tell everybody, while we were up here, guys, if you're still in these calls, consider putting a stop loss in profit. because ADD is starting to show signs of weakness, meaning buying is slowing, selling starts picking up. You might have a hard time getting to where we want to get. So we got close enough, but if you were waiting for the exact point of 557.40, we were about 8 cents short of it, but you have a stop loss in place so that you don't get caught up in this pullback. Okay? I'm just asking you to protect the majority of your profit. You don't have to stop out super tight, but don't give up too much of it. I mean, that was a beautiful move to the upside. Kind of rocky on the way up, but a pretty clear trajectory to the upside. That paid outstandingly well. Okay, now contracts were expensive today too, so I'm not gonna, but still, when they're expensive, 10%, 20%, 30%, 50%. So we had one guy grow his entire account by 34.8% today. His whole account. That is like once in a lifetime kind of growth. Beautiful day today as far as that kind of stuff goes. Anyway, we start pulling back. We put in lower highs. We break down. Lower highs. This is just a downtrend. ADD is trending down again. SPY is trending down again. Now, at this point, most of the people in our group are already done trading. But I said to everybody here, I said, guys, this is a lower high. ADD is printing a red candle. We wouldn't be looking for a big move here. We'd expect that we're going to break through support and head down to the next support, which is right here at 554.40. Again, called it out. There were several opportunities to get into puts here, but we were talking about other trading things at this time. And then when I've refocused back on the chart, I said, guys, look, it's another lower high. ADD is printing red. We should break support this time and head down to the next support. It's a very simple concept. It doesn't mean it's guaranteed to win. It's just a very easy thing to spot. Okay, so if you weren't already in puts, here's an opportunity. We were looking to go from 555.04 to 554.40, we'll call it. So a 65 cent move in 2 minutes. That's a 30+% win. That's beautiful. Okay, that's beautiful right there. And then that was the last thing we talked about until this guy, and we were getting close to 12 o'clock. But again, most of these people were out and done for the day, and I forgot to mark this on the SPY chart, but I will. I'll just go ahead and copy the things over there for you real quick. Copy, paste. It goes right here. Now, what we were looking for in this is the Jimmy trade setup, as we like to call it. This is one of my favorite setups. We just talked about it over here for the upside, right? Breaking the downtrend, waiting for a break of resistance, and continuing up to the next resistance. Well, this is the same exact thing. We're trending down. We close on the other side of the trend line. We have resistance here. We're expecting it to break through resistance because of the higher low. And now you do have a lot more resistances on the way up, but if we're closing above them on the way up, just stay in the trade. ADD started to trend back up again, and this thing turned into another banger because after we cleared this last one here, I said to everybody, the next one up, well, first is going to be 556.62. If we get through that, it's 556.84. If we get through that, it's 557.19, all of which got hit along the way. This was the last trade I called out before I got off the mic. I stayed till 12 o'clock, but another banger and not a single red candle on the way up. Not on ADD and not on the Qs and not on SPY. An absolute banger of a trade. We don't get charts like this very often, especially lately. I don't know where that thing just went. But when we get them, man, it feels so nice, guys. It feels so nice to take advantage of some moves like this. I'm going to part the chart back where it belongs so that people who are still watching my screen, they know I'm making a video, can see what's going on. With that said, that's all I got for you today. I hope you guys absolutely crushed it. For a lot of the folks in our community, for me, I needed a nice clean day like this. It's necessary sometimes for our confidence, for our accounts, to start the weekend off strong and good and happy. We have some people that have been struggling these last few days, few weeks, even a couple of months because the charts have been kind of difficult. And when you get a home run day like this, sometimes it's best to just get the home run, even if it's a base hit. You felt good about it, you made good money, and just walk away. Make it an early work day for yourself. Okay. And today provided that for a lot of us. With that said, if you found some useful information in this video, please like, share, and subscribe. I'd love your support in that way. If you'd like to join our Discord community, well, I'd love to have you. There are links down below. We've got plenty of people in there that are doing the same thing day in and day out. It's a great community, super supportive, no drama. The first week is completely free. You don't have to sign up for anything. You don't have to put any credit card information in, so you have to worry about canceling. If you don't like what you get for the free week, then don't become a paying member, because every day that we do in there is the same thing day in and day out. We look for charts, we look for good setups, and we take our trades accordingly. If you'd like to learn how to do this on your own time, in your own pace, it's all right here in this book. I hate to keep pushing the book, but there's not a single person that I'm aware of that has read that book that didn't find tremendous value in it, regardless of their trading strategy or the tool that they are using to trade, meaning futures, shares, options, whatever the case. Okay. And with that said, I hope you all had a fantastic weekend. I hope you had a fantastic trading day. And until Monday, I love you guys. See you.